Whether you're in manufacturing or you're a service business that fulfills contracts in part with labor and or materials, it's important to understand the numbers that really impact production, impact your efficiency, and your ability to make acceptable levels of profits. One of the huge ones that every business owner will understand is labor and material variance. How are you doing against budget with labor and materials? So you've got a historical variance that you have to understand, and by variance I mean an average percentage that you're over or under on your labor and or materials versus the budget. Then moving forward, you want to put things in place to try and work on those numbers and improve upon them. And the key really is understanding before projects start how you're going to do, planning on the front end. You can look at what's going on in the past all day long and say, oh, we need to do better. But if you're not proactively doing things to change the way business is done to make them better, oftentimes things will stay the same. Setting aggressive stretch goals, planning on the front end, all critical to improving on these variances. Non-billable hours. This is really a huge area of concern for a lot of companies that focus very intently on labor variances, material variances, but aren't really paying as much attention to these other miscellaneous hours that people are logging to work orders that aren't related to projects. What kinds of things would those be? For example, sweeping up the shop floor. A guy finishes a project a little early one day and spends a couple hours building something for a break room. Maintenance on the shop. Miscellaneous things of that nature. If you don't really pay attention to it, it can get really out of control, especially if you're very intent on downward pressure on the hours. Meet your hours. We need to be more efficient. Guys will inherently, oftentimes, guys, women, anybody, will put hours on these non-billable, non-productive, non-project related work orders because then it doesn't show up on the project report, right? So something to look out for. You got to have a number that you're managing. Every business is different, but you got to look at it and say, how many hours per day are we willing to absorb in these areas? And then you have to monitor that number on a daily, weekly, monthly basis and make sure it's not getting out of control. If it's too high, what are you going to do to fix it? Return on assets. This is an area that is intuitive. Everybody kind of understands it, but if you're not tracking it, you might not be doing what you think you're doing. What is the return that you're generating on your investment in fixed assets? An easy way to look at it is to think about a situation in which you're buying additional equipment. Let's say you're a shop with $500,000 in fixed assets and equipment on the shop floor. If you're going to spend another $50,000 on some new equipment, you're not doing it to continue to make the same level of profits. You're doing it to increase efficiency, to increase output, and increase profits, right? So what the return on assets figure measures is your net income over your fixed assets over a given period, right? And without knowing that and without keeping tabs on it, you could be in a position where you're increasing assets and not increasing your return on assets, right? And that doesn't make sense. So benchmark it against competitors, understand internally your company's specific conditions, and then determine what should be an acceptable ROA for our company. Monitor it, measure it, make sure it's in line. Other direct costs. These are the kinds of costs that are definitely project related, but many times companies' accounting and project management systems don't cost them directly to jobs. So it's kind of this bucket for all this miscellaneous stuff, supplies, miscellaneous tools, all these various things that for one reason or another aren't charged to jobs. But sometimes it can be a fairly big cost center, sometimes as high as 10% of revenue. What percentage is it for your company? Go through your P&L and really understand which line items here aren't being costed to jobs, and make sure that you've got that factored in to your pricing so that you're not leaving money on the table, all those kinds of things. So there you have it. Inventory. Inventory obviously is a significant use of cash for a lot of companies. Companies should generally try and purchase just in time which means ordering it as late as possible. But at the same time, you have to balance that with all sorts of various factors, right? And sometimes a smaller company can purchase more efficiently if they order it a little sooner. You might be able to get some discounts if you've got the cash available to buy sooner, things of that nature. Nonetheless, it's important to look at how often it takes to turn over your inventory. If you're a business owner with people in purchasing that have a lot of autonomy over that department, it's generally easier for them to purchase a lot of inventory as soon as possible so that they don't have to deal with it on a regular basis and that they have less stress, which is understandable, makes sense. But is that optimal from a cash standpoint for your business? So monitoring your inventory turnover and watching it, making sure it's at an acceptable level is very important for your business. Another critical number to monitor for a production environment is on-time delivery. It's essentially one of the biggest measures of meeting customer needs. If you're not delivering on time, then your business will suffer. The goal should certainly be 100% on-time delivery. Why would you settle for anything less? And make sure you're tracking it. You need some sort of a mechanism within your project management system to say, this is when we ship the product versus this was the due date. And then you can track whether or not you're shipping on time. And of course, quality and rework. The real cost of rework has been said to be about 7 times the actual direct cost of that rework. Obviously, it's a huge, huge, huge issue. So make sure that you've got tracking and reporting to understand how much rework is being done in your business. What's the cause of that rework? What can we do to make sure it's not happening moving forward? And then safety. In a production environment, safety is such an important aspect. Obviously, it's something that your company is focused on. If not, you're probably paying for it in insurance premiums. It should definitely be a huge priority for not only the well-being of your employees, but obviously the company's financial position. Incidents directly impact your insurance premiums, which obviously impacts your ability to stay competitive pricing in the marketplace. So you want to be able to track these things, report on them, so that it really becomes part of your company's culture that we want to have a zero incident workplace. So those are some of the things that are really core to most production environments. 6 or 7 critical numbers to monitor for companies in manufacturing and production. And now let's take a look at a sample dashboard for how you might look at these numbers and keep tabs on them on a weekly basis. So here's an example of what a production scorecard might look like in your business or in a business that's in some sort of production or manufacturing environment. You can see that there's a lot of red, a lot of green, a lot of numbers here, right? The goal of this is to give you a weekly snapshot of the critical numbers that you need to be monitoring. So as you can see, we've got all of the items listed here that we went through previously. Labor variance, material variance, non-billable hours, return on assets, other direct costs, inventory turns, on-time delivery, rework, and safety. Next to that, we've included how is it measured. And that just gives everybody a reminder, you, your managers, whoever it might be that's reviewing this report on a weekly basis, gives them a reminder of exactly what that means. So for labor variance, actual versus budgeted hours. Material variance, actual versus budgeted materials. Non-billable hours, weekly hours not job related. Return on assets, net income divided by fixed assets. Other direct costs, expressed as a percentage, other direct costs divided by revenue. Inventory turns, material costs divided by average inventory. So how many times a month is your inventory turning over? On-time delivery, how often did we ship on schedule? Rework, weekly hours spent on rework. And safety, number of incidents. Jumping over to the right side here, you can see we've got this legend with below, goal, and exceed. So the goal here is stated as percentages or whole numbers of what your target is. Below indicates a level of performance that is not acceptable. And exceed means you're doing very great, exceeding expectations, and people should be applauded for that. You can see that there's somewhat of a range in here between the below and the exceed. So, for example, with labor variance, if it says below is 1%, that would mean that anything over 1% is going to be flagged as red. Anything less than 1, but also between -7%, would be white. That's in the goal range. Anything better than -7% would be green. Okay, so that's how all that works. Then once a week, you're going to look at this report and have all the numbers. You're going to want to look at what happened last week. That's the most current information. Then you'll have a formula that will calculate all these measures for the current month. You'll have one for last month, year to date, and I find it helpful to have a trailing 12-month figure so you can really track long-term progress. Right? So a lot of people will look at this report, look at this dashboard, and think, how am I going to pull all that information and keep it up to date? Well, using a simple database in Excel, if you don't have other means to do so with your ERP or project management or accounting system, you can get this information input on a weekly basis without too much trouble and have this report query that database to pull the information together in a meaningful format so that all of this happens pretty automatically, right? And that's the goal. You don't want people spending a ton of time putting this together. But with a little work on the front end and a little bit of maintenance, you can get this thing coming out on a regular basis once a week, and then you've got all of the important production numbers that you need to be keeping tabs on in front of you once a week. So you're not running around wondering what might be going on. You're getting the numbers once a week. You're looking at it and saying, last week 11.2% over on materials. How did that happen? What do we need to look at? What happened there? You're getting very fresh information on a regular basis, and everybody in the company knows these are the numbers that we have to manage to. On-time delivery, same thing. You look at this, say, great job, 100% on-time deliveries last week. Fantastic. So with a report like this in place, it gives the business owner much better transparency into the numbers that matter and allows them to then manage these numbers to effectively achieve the profits that are acceptable within your company.